Hey everybody, welcome to the now recorded, was previously supposed to be live, but now recorded, uh, Fireside Chat, ostensibly hosted by Marble, but really between Marble and in Young Alfred. Before we get into anything else, I'm Stuart. I'm the founder of Marble. Marble is the first digital wallet, sort of single account for insurance, home, life, umbrella, and the first rewards program for insurance. And I'm joined by David Stacy, co-founder of Young Alfred, and I'll throw it to him.
Hey everyone, excited to uh, be on this conversation today. Yeah, I'm Dave Stacy, co-founder of Young Alfred. What we are is a platform to compare and buy personalized insurance, really specializing with the home product. We offer products from over 40 different insurance carriers nationwide. You can go onto our direct-to-consumer website, youngalfred.com, and shop with us there, or you may find us in other embedded flows with partners leveraging our APIs to bring the shopping experience into their own workflows.
Unbelievable segue into how we work together. Yeah, Young Alfred and Marble are partnered, and one of the ways that Marble members can shop is using the Young Alfred APIs they're building, which are fantastic, and for people in the insurance space, represent kind of like a sea change in how insurance is going to be distributed, which is really exciting. Um, But today's webinar is less about the underlying nerdy technology of insurance, though we can maybe add that on a future month, but really to get into the nuts and bolts of homeowners insurance. David and I have known each other for like maybe 3 or 4 years now. In different agencies, David's always been a Young Alfred. I did another agency and then Marble, and we've talked mostly about P&C products, primarily, as David said, around homeowners insurance. I used to work for a mortgage company and sold homeowners insurance through that platform. So today we're going to spend some time talking about kind of like what people need to know about the nuts and bolts of buying, evaluating, and making decisions about homeowners insurance. It's a huge asset class, right? I mean, it can kind of seem simple because you see it advertised on TV a lot with like funny mascots, but it's a really important product for protecting what is typically American households' biggest financial asset, their home. So it's worth sort of getting into it, asking the dumb questions, and seeing where the conversation goes. We'll cover a couple of basic pieces. We'll cover the basics of buying home insurance. We'll cover sort of some of the terms that you'll hear, like you'll hear terms like market cost or replacement cost. We'll also talk about like what determines eligibility and a little bit what determines pricing. So that kind of, you can go down that rabbit hole, and we'll just sort of touch on it briefly. And then we'll also just sort of see where it goes. As we were joking about before, David and I have a lot of brain space committed to insurance. So random stuff may come up. I don't know. Who knows? Or it may not, and we'll stay very focused. I don't know. Anything else, David, that I should intro before we get into the questions?
I think that's a good overview of the agenda. We'll see how much randomness creeps
Okay,
in.
good. Yeah. Yeah, exactly. So I guess like when it comes to like buying home insurance, right? Just like purchasing the product. And this is actually a place where I think you'll have, years of experience with, but hopefully I can contribute having sold this product a little bit myself, but particularly in one specific way. But in the basics of buying home insurance, like I need to get this thing. What would like the average person, what are the three things that the average person would want to like have in their brain? In like common, I'm trying to think about like in sort of commonly understood things, like what should you're busy, you're doing stuff, but what should you be thinking about when you go to buy homeowners insurance?
Yeah, so look, I think one, you need to think about how you're actually going to find it. So we can cover some of the search and friction on figuring out what's going to be the best option for you. Two is definitely getting into having adequate coverage. So you cover your home, right? But there's a bunch of add-ons, carve outs in different policies, different deductible levels you can select. Do you need other complementary policies that attach to a home policy like flood, earthquake, umbrella, just to make sure you're properly covered? And three is doing some research on the actual carrier, understanding who they are, how they pay claims, what their customer service level is, and making sure that's a good fit for you. So, look, I can kind of start with the actual shopping experience and trying to figure out, how do you find the carrier that's a good fit for you. Um, I think about 7% of the US population starts their search online, and that compares to over 25 in auto insurance today. So it is still a much uh, like consumers are doing more of this offline, but the trends are moving online very rapidly. And part of that is, look, until very recently, you couldn't buy home insurance online. So consumers are often left with a couple of different options when they're looking for the product. They can go search Google, find top home insurance websites. Almost everything you're going to get is some form of lead generation. So a company that's going to collect your info, sell it off on the market to other carriers and agents who are going to call you and try and sell you insurance. So you can imagine how fun that is once they get your phone number. Um, you can check the big carrier websites direct. Some of them have online experiences. Most still kind of refer you to an agent, or you're working the traditional way. Do you have a local relationship? Maybe you already have auto insurance. You check with your insurance agent who had placed that. Um, so one thing on this shopping, I guess the benefits of diligently shopping the product. You don't have to check 100 carriers to find the best one for you. But the market as it currently exists is incredibly fragmented, and you find the different insurance carriers are all looking for a certain consumer profile that fits within their risk parameters and they can price competitively. So you can't just go check like 3 carriers and expect that one of those is going to be a great option. You are better off checking the broader market, because you may find if you check 20 carriers, only 5 of them are actually going to give you a quote, and only one of them is going to be competitively priced. And that does kind of depend on what your existing situation is. Do you have any like key risks that carriers don't like about your property or your loss experience? Ultimately, like one thing we found in our data is the price differential between the most competitive carrier and the second most competitive carrier. So you're just looking at 1 and 2 is on average $450 nationwide. So there is real savings on this product. It does pay to kind of try and do your diligence and find the right carrier. And, you also at the same time want to be cognizant of the carrier you are signing up for and making sure they're, well capitalized and properly backed.
So yeah, no, I would just it's not actually dissimilar to like buying a home itself. Like I think it's like you have parameters like where you want, like what amenities you want, bedrooms, bathrooms, things like that. And it's like I'll say like as a consumer, even before I got into the space, like the feeling is that almost insurance, because there's this sort of like veneer or there's like appearance of this like, commodity, like there's this underwriting process that like maybe all the prices are kind of clustered in the same band. And it's a misconception that people have in the mortgage space too, right? That they think like all these rates, like the floating interest rate at the Fed would mean that we all get the same. It's like, no, these companies are really trying to fill their risk portfolios with people who look a certain way when they underwrite them. And it's like really benefits you to try to have that conversation digitally or whatever with a bunch of those people to see who you're a good fit for, in the same way that you would like look at a couple different houses to see what you liked.
Yeah, look, I think the easiest way to understand this is no single insurance carrier would ever want to insure the entire state of Florida.
Yeah.
And in fact, actually, most of the big brand names you recognize do not operate in Florida anymore. And it's a lot of, single state carriers that they specialize in certain zip codes and profiles of homes within that state. And they're very competitive there. But, if you're not in the right zip code, they're not even going to quote you. And so it is a lot about just risk selection, and it makes it more challenging on the consumer because you have to filter through all the different options on the market and, find the one that's a good match for you.
This is a little bit of a tangent, but just curious because you guys are, closer to the distribution. Are you seeing the large carriers behaving is coastal Texas or like Louisiana starting to look like Florida in terms of what the large carriers are willing to underwrite there?
Yes. Texas has more options. Louisiana is a very difficult market for insurance right now. Part of it is the building codes are not as up to date as they are in other states. So you've got all these homes that were kind of poorly built that, as the next hurricanes continue to hit that state, they're going to see significant damage. So that's one where this more is going on to the state run plan, similar model to Florida, which has
Yeah,
Citizens, which is the insurance carrier of last resort. You know, it is not in their interest to bring on more policyholders. They want to decrease the size of their book. Um, but when the standard markets pull back, more and more business goes on those state plans, and that's what's happening in Louisiana. Coastal Texas, I would say there's still more options there. There's more appetite to do business and
yeah.
carriers that are riding in Texas. The third market that is very challenging right now is anything that has brush fire exposure on the West Coast, primarily in California.
Yeah, I didn't even think about that in the same
Yeah,
vein. Yeah.
yeah, that's been a hard market that I'm optimistic it more carriers are going to start to come back into the California market. I know some of our existing partners are looking into that and what it would take, but that's going to be a 1, 2, 3 year kind of
Yeah.
time horizon with hopefully no significant fire losses to scare them away.
Actually, to get us back on track, but thank you for going on that walk with me there. Talking about building codes, the next topic we wanted to sort of talk about it is a little bit of this like kind of like terminology that goes into how insurance companies talk about the physical construction of your house and how that relates to the underwriting and the coverage that you get. So there's these terms that one may hear. Replacement cost tends to be the more common term, but you can also hear this term market value or market value approach. And not to keep throwing it, I'll take a crack at this one because it's not actually supposed to be a Q&A, so but it just like lends itself to that format. But the basic way to think about those things is replacement cost again is and David can just correct me where I'm wrong, but replacement cost is going to be using like materials. What would it cost to rebuild your home? It's actually a fairly like straightforward explanation. What would it cost to rebuild your home exactly as is today using materials of equal quality? I believe is like the sort of
like kind. Yeah.
Like kind, exactly. Which is interesting a little bit. And I actually don't know if you've seen this, David, given like lumber and materials prices. Like I don't know if are you seeing RCEs like going up, or is that sort of immune from that stuff?
I think there's just a delay on the systems updating for it. So I can't say we've seen the replacement cost estimates tracking to what the different prices in building materials have hit in the last year. That they will probably see some updates over the next year. I guess the one way in the policy that is built in to protect against short-term fluctuations in pricing is you can have a endorsement, which is just an add-on to your policy. That is, the standard one is 25% extended replacement cost endorsement. Some go up to 50%, some go up to 100%. Some carriers even offer guaranteed replacement costs. So price fluctuations don't really matter. But if, for simple numbers, if your home costs $100,000 to replace and your insurance policy covers you for $100,000, you may have an additional $25,000 in coverage built into the policy as an endorsement, which will cover you in times like this. My guess is premiums are going to continue to rise a little bit. I've actually seen estimates over the next 5 years. Home insurance premiums are expected to rise about 25%. Part of that driven by increase in building materials, the other part driven by just the natural disasters and rising cost of claims that seem to be hitting the industry.
Yeah, that's I can't say that's totally surprising to me, but it is still a big number. two things. Do you market value? Let's just go back to that, and then you used a term there that I want to like double click on. But market value is just contrary to the replacement of like materials. It's the you be covered. So this is all again what your insurance company would pay during a total loss in your homeowner's insurance policy. Market value is the value of the land and the house at an appraised market rate. Is that correct?
Yeah, I think yes. The easiest way to think about it is like, what can you sell your home for on the
Yeah,
market
yeah, yeah,
today? And look, some markets and properties, the market value is significantly different than the replacement cost. So you know, you can see really, I guess, odd scenarios where if you're in a high cost of living area, in Manhattan or beachfront property in Florida,
yeah,
certain areas of California, your market values are like $2 million, but the actual cost to replace the property is 600,000. So that's where your insurance, you're still well covered if you have $600,000 worth of insurance, even though you just paid $2 million for a home.
yeah,
On on the flip side, in areas with really depressed market values, think of what happened in inner city Detroit, where there's all these homes selling for $10,000. If they burn down, it would cost $100,000 to rebuild them. So
yeah,
that makes it really hard to insure properties like that because you have the moral hazard issue of insurance. Someone wants to buy a $10,000 home and accidentally leave the stove on, and get $100,000 payout from the insurance company.
Moral hazard that David references is like one of the classic when you're getting licensed as an agent. It's like one of the classic things that comes up on every test. It's the concept that like there cannot in an insurance contract you cannot have a conflict where the insured would benefit from the loss. Basically, that would create a moral hazard. There's also something confusingly called a morale hazard, which is a different thing, which doesn't really matter.
Yeah, I don't even know the exact definition of that one.
It's hard. It's sort of like explaining short selling. Like when I try to explain it, I get lost halfway, and I'm like, I actually don't know how this works. You mentioned a second ago like the term endorsement. I think it's worth like talking about that because I think that's like it's like this like you did define it at the time, and an endorsement is something additional to your policy. With it out, it's like you basically are expanding the four walls of the policy to include additional coverages. It doesn't, to the best of my knowledge, necessarily refer to additional items. That's often like a rider, I think, is what you would call that. An endorsement is more of like expanding the existing coverages. Is that like generally right? And then also like, is that up to the agent to sort of guide? Maybe even talking about because like only 7% people are shopping online today. Where does like young Alfred sit in being like, hey, evaluate these additional coverages via an endorsement?
Yeah, it's a good point on the nuance there. So first, an endorsement. Yes, I'm trying to think of an example where you're not just expanding the coverage. For the most part, you are just expanding the coverage that exists on the policy. And part of that is a certain coverage might be carved out, but the endorsement then provides coverage for it, though it's already into the existing policy. For instance, personal injury coverage may be carved out. You can add a personal injury endorsement, and then you have personal injury coverage built into the policy. The common endorsements are extended replacement cost, water backup coverage. So that's almost always not included in the base policy, and that's if water's backing up through your sink, drain, toilets. That's a very valuable one to add on. It can be a little bit more expensive, and then you can increase the limits of things like jewelry or firearms, or add personal injury coverage. Those are mostly the common endorsements you'll see, and then the other like add-on new policies, right? Riders, you can add jewelry insurance. Oftentimes people are scheduling their engagement ring, flood insurance, or Earthquake is one that sometimes you can add into the existing home policy if the carrier offers it. Most of the time, it's its own standalone policy. So, look how we kind of treat that in our form with the online experience, where you're taking a lot of the Q&A that might happen over the phone with an agent. Is, we have a detailed form. It's asking you about certain belongings that you own. Um, it's optional to provide us information on your net worth. Just gives us a sense of like what sort of liability limits you might want to consider if you need an umbrella policy, and then a sense of, are you looking for the most basic package? Price is all you care about. You want something more standard, or do you want the premium deluxe? And finally, an overview of endorsements we recommend you may want to add. So we kind of factor all that in on the back end in our algorithm to craft policies that are a fit with what we think A, you need, and also B, what you're actually looking for. And there's some science in it, there's some art. Ultimately, once a consumer sees the pricing on the different levels and coverages, that kind of helps drive their decision. Hey, do I need this, or do I not really care that much about it?
Yeah, I mean, I think that fundamentally is the point, right? Is that it's like you, in this process, consumers have so much more information and so much more autonomy to kind of get to come to grips with like what these things can represent for both their budgeting, spending, monthly expenses, as well as the coverage and the risks they undergo, right? And it's like that's pretty exciting in terms of how much you can to take control of this, like if you want to, or you can talk to someone and make that decision collaboratively. But it's like not how 2 generations ago this necessarily worked.
Yeah, I think bringing things online is just bringing more transparency into the process, because historically, an agent's going to send you a deck page with a quote. From a declaration page is like an overview of the policy, a summary of it, and unless you live in the world of insurance, you really have no idea what's on those things.
Yeah.
So when you bring things online, you can kind of craft it and distill it down into the key items that are covered, the coverage limits, and the pricing, and make it easier for someone who doesn't understand anything about insurance to understand what they're buying. And there are, look, you do have to be careful with some of the policies on the market, especially in the areas like Texas and Florida. I saw in the Wall Street Journal, I don't know, a month ago or so, there was a big article about what's happened with the claims given the freeze that happened and caused over $1 billion of losses earlier this year. There were carriers on the market that an agent selling policies that carved out water damage. And so some people are just getting rinsed on their losses because they didn't actually have water damage coverage in their policy, which is not standard. That's like a bare bones policy. You do see it kind of become market in older homes, and where the home's almost uninsurable in certain areas like Florida. So it's kind of your only option, but definitely not what you want to be buying if there's other options available. And ultimately, like, some of those people had very poor agents, and they're
It's
out of the
also worth,
home.
yeah, and that like that's the the like kind of crummy side of how these things can get packaged and sold, however you buy them. It's worth also just like you touched on an interesting concept there that we might take for granted, but like how carriers assess, or how really like risk claims associates like look at damage, right? Like you might like the classic example it's given in like agent tests is like if the wind of a hurricane pulls your roof back, but then rain causes the damage, that would be uncovered water damage, would not be wind damage, I believe. Is that right? I can't quite remember, but it's
So
like,
I think it's always the root cause. So if the
okay, so
wind was
maybe
the root cause of
that
it,
would be wind.
then it would
That
be
would
the
be wind.
wind.
But
Yeah.
if it was a burst pipe, that would be water, and it would not be covered if you didn't have a
If
water
you didn't
coverage.
have water damage. Yeah.
That's right. So like that's exactly it. You're right. So it's like as you look at a policy and endorsements, it's worth thinking about not just the immediate damage, but like what big things could happen to your house, and are those covered? big natural events, like things like that. Yeah.
Yeah, I mean, look, I think the standard home policy is a really solid package for and fits the needs for a majority of the people on the market. It is when you start to get into these like you're really trying to get your price down, so you're pulling out key coverages that are not going to be helpful. But to your point, like there's insurances to protect against these unforeseen events. I mean, I think flood is one of the best examples of this right now, where like I'm currently in Arizona, and you would think like flooding, very minimal chance of having any flood. But at the same time, they're building so many homes, so much new infrastructure. Like the drainage of the water may not have anywhere to go. So a little bit of rain
Can
can
do.
flood a one street in a neighborhood, and next thing you know, you have flood damage. And is that covered or not? So there's there's a lot of like the unknowns. What do you not really know is there, and that's what ultimately insurance is here for. And
Yeah,
looking
yeah.
at
It's
your
why it's
needs.
like kind of an interesting product. To that point, like, or to like talking about flood, like, do you guys, I remember we would sell at Better. I don't see the policies we sell as much today, but at Better we would certainly sell policies that had flood monitoring or home monitoring kits. And the sort of the wrap on them at the time was like, could be transformative. People don't really install them. And I guess the question is like, do they even affect the rate? Or like I guess like could you get a better rate if you have all this stuff installed in your house?
Generally, they do offer a discount, and you can get a better rate. It's usually not enough to move at least what we found, not enough to move the needle. Part of it is, look, on our end, we don't want to have to deal with a frustrating consumer experience. And the number one thing we found that will piss consumers off is, you know, on a Saturday, they're told by their insurance company that they have to install some water valve thing that they have no idea how to, and they end up spending 3 hours on it and can't get it to work. So it's look, I think they're very valuable. I think the monitoring, you know, via a home would add some of those kits, assuming I'm comfortable that they're not spying on me. But
Yes.
uh, that it because like it will catch water damage
Yeah,
much
I mean the
sooner than
auto
if
like
you missed it. But the actual implementation of the thing is where you just get significant drop off because there's some friction there.
I've read about the like new home starts that have auto shut off valves. And that was the first moment I was like, that's interesting to me. Because
Hmm.
like my wife's family went through this where they like had a they have a beach house. They were like not there for like a month in December. Pipe burst and just pumped water across the ground floor for like a month. Yeah, I mean, just like there's a total teardown, a total loss. Like,
Damn.
and it's crazy to think about that outcome being differentiated by some piece of technology that has even a 50% chance of catching it and stopping that damage. Um, is a pretty big upside, presumably to the insurance company too.
Yeah, that's the whole kind of, I guess, pitch they have for trying to get these devices into homes too. I mean, look, I guess the scenario you laid out really calls to, I guess, the need for if you have a second property that you're not
Yeah, or
in
something you're
very
not in.
often,
Yeah,
no one's there monitoring it, would definitely opt into those type of devices. Um,
yeah,
Less of a need in COVID times. If
yeah.
you're working from home, you
Home.
spend all your time at home.
There's
Water
like
burst, you just go duct tape it, right? That
yeah,
kind of.
there's nothing. There's nothing I need possibly uh, to monitor my home because I'm home basically. This is like the first time I haven't been home in like months. So this is not my wall. This is a WeWork. Um, and I guess like as we think about as we think about like the home buying process, home building process, like financing process. And this is maybe I'll take a first crack at this though. I think this is probably the area that you and I both know, maybe the best. Well, I won't speak for you, but I know you know it well. the interplay of these two financial instruments, the mortgage and the insurance, like, does it benefit a consumer to start thinking about the homeowner's insurance the moment they start a mortgage process? Maybe I'll put the question to you like that. Like, how would you talk to someone about, like, hey, David, I'm like locking in a rate, you know, and you're like, oh, have you thought about insurance yet? And they're like, no, I'll deal with that later.
Yeah. So look, I think it's good to get a quick estimate on the insurance upfront when you are trying to lock in a rate or just see how much you can afford. I'm going through a new home buying process. And if you go on some of these other calculators online, the estimated cost of insurance is just going to be some basic percentage of the home value. And that can significantly differ than what your real insurance cost is going to be. So you can either create a ton of room in your monthly payment because your insurance is going to be $1,000, not 3,000, like the calculator said, or it can also flip a little bit if you're in a high risk market where insurance is going to bite you as you're tracking to close on the mortgage and you realize it's 2 to 3 times as expensive as you
I will
thought.
say though that those calculators tend to be highly, I would find them to be highly punitive. Like, you would have to be in
Yeah.
a very niche risk market, I think, to come in higher than what they quote. At least the ones
Yeah.
I've seen, like at least the ones the ones at the top of the SEO, at least.
Yeah, like the ones we're playing with, they're saying the estimated cost for my insurance would be like above $3,000. And then I know the market we're buying in. We actually built a calculator for this. You can
Okay,
go
cool.
on our website. And it's like, give me the zip code and the market value of the home or the rebuild value of the home, and we'll estimate what the insurance cost is there. That's based on like real production level quote data we have in our system, and it's more like $1,000. So
Yeah,
you instantly free up quite a bit of room on the mortgage
yeah. And then on a
side.
mortgage, that's extremely real money.
Yeah, it's significant.
Of course, yeah, yeah, yeah. I mean, I won't tell anyone that you're building a private trampoline park or some other highly dangerous activity back there. That'll raise your rate. Yeah, no, I mean that is true. I mean, yeah, yeah. Sorry, we'll cut later. No, but it's true. I mean, my wife and I are nowhere near like buying, but when we mess around with calculators, I'm always like, well, we can just zero that. Like, that number is garbage. That's like, especially because we'd be looking on like in the Northeast, which so far, knock on wood, is fairly, uh, has been okay in terms of these bigger cat risks, except on the coast, I guess. And then when I'll take this one actually. So the crucial thing as well to think about in the mortgage process as well is like when you need the insurance, because for something that can seem really easy and fast when you look online, and with a service like Young Alfred can be quite fast. Young Alfred via Marble, trying to figure out how to shoehorn a pitch for my own company in it, but the things can change. Your appraisal can come in late. Your appraisal is often going to set the replacement cost coverage A value, the dwelling cost. So Fannie Mae, the largest sort of mortgage clearinghouse in the country, is going to set all the mortgage guidelines, and they're going to buy a mortgage from the person that makes your mortgage, because basically every mortgage that you get is then sold off on the market. Is they're going to need coverage A from your insurance to match the replacement cost, to pretty much match the appraisal, or the dwelling cost in the appraisal. There are some other market values in the appraisal, and if that, which is especially in a market like this, if that appraisal comes in at a different rate, you may find yourself thinking, "Oh, I knocked out insurance real quick, no problem." And I've seen this. I'm sure Young Alfred's seen it. And going back to your insurer, like, "Hey, I actually need this much more coverage," and then insurer suddenly seeing like, well, we are actually not going to write that up to that amount or down to that amount or whatever. And then you might find yourself, with your closing date approaching, hustling to find a policy that you thought you had in the bank. So it's not quite like an easy as slam dunk as you would think. It is worth having a couple different irons in the fire, I would argue, but I don't know if I'm like way off on that.
Yeah, no, we find a lot of scrambling sometimes at the very end as you are tracking to close. And, we have kind of like a loan officer support line to answer questions on the insurance, make changes if needed. A lot of times they really just need the actual replacement cost estimate and the calculator behind that
Yeah.
that supports what's on the home insurance policy. So if you can provide them that, they can usually justify that, okay, this is enough coverage, even if that appraisal value is a little bit higher. There can be some back and forth there. So what we ended up building actually for some of the mortgage partners, right, is they can have a dashboard and see what the coverage limits are, what the mortgagee clauses are on the policies, make and submit change requests. So all that gets kind of like taken care of earlier in the process, and the consumers kind of sits in the middle here as well.
Yeah.
So you want to just streamline communication between the agent and the mortgage company to get that taken care of.
Yeah, the faster you can like get the consumer what they want and what they need, but then remove them from this back and forth, which is really about at a certain for the last mile of a mortgage and a homeowner's insurance, it becomes like creating the correct stack of paper that an underwriter on the back end can sort of flip through and sign off on. But like there is not room for a number in there to be wrong. So that a dashboard like that, and I mean, yeah, a big piece of like if I were to buy a house and go through this process, a big thing that I would make sure I was always asking for, if people are somehow still listening to this after 30 plus minutes, here's a soundbite for you, is I would make sure to ask for that replacement cost estimate, like as you're working with your insurance agent, because that is going to be a critical, like it's going to be sort of this afterthought that even in 2021, like lower technology or, you know, people who are not quite as adept at this may not send along with you or may not make available to or point out where it is in the stack of documents, but your mortgage company is going to be hunting for that because that's going to be critical to the underwriting.
Yeah, there's you would know this. There's departments at mortgage companies, and the people's sole job is to call insurance agents, tracking down declaration pages, and then
Yes,
verifying the insurance. And they're like massive departments at the larger ones.
it is. Yes, they are large teams. And I guess like maybe the last quick thing is like just paying your like so you pay often you'll be asked basically always asked to pay through escrow.
It's what you want to do. You can pay direct if you want to put it on your credit card, which you'll usually have to pay a little bit of like a credit card fee or EFT. Majority of people buy when they're going through that home closing process, and they just wrap it up into their escrow payment. So they they don't see the cost of their insurance hitting their bank account as transparently as you would if you're paying on EFT or credit card.
And can I like if I want to change from paying escrow to credit card like midway through my mortgage, do I have to go to my servicer?
Yeah, you would let them know that you changed the payment method, and then you'd also just want to make sure you are making your payments direct. So you'd have to let your insurance carrier or agent know that you're updating the payment info.
Gotcha.
We
Yeah,
deal with
these
a
are like
lot of escrow checks that get mailed to the wrong address, and tracking payments on the back end is not as simple as you
no, none
think.
of it is. None of it is.
No, yeah, nothing
Yeah.
in insurance is simple.
No. One day it will be, maybe. With that incredibly optimistic note from the both of us, two people who are deeply invested in making it more simple, I would say. So that is optimistic. I think I'll start to wrap it up. David, anything else that we should cover or like touch on, or we'll wrap it up and sort of close this one out? Looking forward to next month.
Yeah, I think one other thing top of mind we just kind of touched on, and then we can wrap it up, is thinking about your eligibility for insurance. Look, Stuart alluded to it. You know, if you have a trampoline on your property, especially one without a net, things like a swimming pool with a diving board or a pool, certain types of dogs, you know, pit bulls, Rottweilers, even Huskies are on these lists now. Fun fact: over a third of liability claims in the U.S. are due to dog bites.
Yeah, no, it
So
has like a real impact. Like, and it
yeah,
can lead to like tough conversations.
it can make things like that can make finding insurance more difficult. So as you do think about if you're going through the mortgage process and when to shop, the more boxes you check that an insurance carrier doesn't like, the earlier you should start shopping, just so you
Yes.
can find something and not, you know, gum up your closing.
that's a great rule of thumb. Just like thinking about like the 5 to 6 things that are like these big blocker, like proximity to the coast. Yeah, dogs, trampolines, pool. I
Age of
like
roof,
yeah,
old
yeah, yeah.
wiring,
Old
yeah,
wiring.
bad claims history.
Yeah. Maybe something to do with heating. I feel like boilers are often an issue.
Yeah, if you have certain types of heating or like
Yeah.
pellet stove in
Yes.
the
Yeah. Yeah. Yeah.
home.
Just things that like you're just gonna want to like lengthen the tail at which you can get at a competitive rate, because if you're rushing, you're gonna get at a high risk of getting railroaded into something very aggressive.
Yeah.
And like I'll say, like we see them come through Marble too, right? Like we'll see policies come through, and you just look at them and you're like, this is not the best rate this person could be paying right now. Like, and we don't always have the full picture, but even with the picture we do have, you just sort of know like that they're not in some huge cat area, but they're still paying some crazy amount of money, and you're like, this. There's some backstory here. This happened fast. This person didn't want to think about it, or whatever happened, and hopefully they get a better rate.
Yeah, I think my guess is a lot of those are they don't even remember, they don't know who their
Yes,
insurance carrier is, and they don't remember buying it because it was just
yes,
like wrapped into everything as they're closing. A lot of
exactly,
that
exactly.
out
Just like
there.
getting just blinders on, which I get it. It's a huge transaction.
Yeah, and it's not
Um,
something people want to do.
no,
Go
no,
shop
it's
for insurance on a Saturday morning.
yeah, it's like all bad news. But hopefully, it's more fun as this technology is, or at least a little lower friction. I don't know.
Yeah,
Buying, look, I'm not saying I like love buying flights, but like buying flights has gotten, at least I can do it while I'm like watching TV or something.
yeah. It's almost like as I was learning about the insurance industry, it's kind of like they should teach this in school at
Yeah.
some level because there's a lot on like wealth, growing your wealth
Yes.
management, like how to invest. But equally important is protecting those assets, and that's where insurance comes in.
I think everyone should get licensed in school, and then we all just sell
I,
each other insurance.
yeah,
Look,
everyone's trying to sell everything.
everyone's trying to sell everyone insurance all the time. Uh, um, thank you to David for joining us. David and I are going to be doing another conversation next month, talking about auto insurance, a place that I am a little shakier on. Have done some selling of it. I'm a native New Yorker. I don't own a car, so I don't have any auto insurance, but I'm sharp enough on it to be dangerous. And I think David has more experience. And that will be, I think, mid-August. And we'll do that one live, August 17th. And that is it. Again, thanks for everyone who stays with us on this one. David, thanks for joining us. David, any final words of wisdom as we exit?
No, enjoyed the conversation. We'll catch you all on the next one on the 17th. Thanks,
Exactly.
Tim.
Thanks, everybody.